Hi everyone, we're doing our project on the ICBC no-fault insurance policy and how it changed from basic auto insurance. I'm Martin.
I'm Rachel.
I'm Jay. I'm Armand.
To understand ICBC's no-fault policy, we first have to understand the industry and market structure. ICBC provides basic auto plan insurance as mandatory coverage for vehicles in British Columbia, and since ICBC operates as the only provider of this type of insurance, this economically makes ICBC a monopoly. However, this is not a normal profit-maximizing monopoly, since ICBC is regulated by the BC Utilities Commission, which is an independent regulator responsible for approving basic insurance rates. So ICBC has market power, but its pricing is constrained by public regulation. This market is also not entirely monopolized, since ICBC also offers optional coverage, which includes products like collision, comprehensive, and extended liability insurance. In that part of the market, ICBC competes more directly with private insurers. The key policy change was ICBC's move from legal-based insurance model to a no-fault care-based model called Enhanced Care. Enhanced Care launched on May 1st, 2021 and created a new way of doing auto insurance in British Columbia. Under the old system, compensation after a crash often depended on proving fault and negotiating or suing for damages. That made the system much more adversarial, slower, and more expensive because a large portion of money was spent on legal conflict instead of going directly to injured people. Under the new no-fault model, ICBC's Enhanced Care that says that people injured in a crash are entitled to care and recovery benefits, no matter who is responsible. ICBC reduced the role of lawsuits, reduced legal friction, and made compensation more predictable. This helps explain why the policy could support lower premium spending while providing crash victims with care and recovery benefits.
So first, this behavioral change affects insurance premium to supply and demand. ICBC has major market power in BC's basic auto insurance market because basic auto plan coverage is mandatory. Demand is relatively price inelastic. Most drivers must continue buying coverage even when premium change. In supply and demand terms, lower expected claim costs for ICBC shift the insurance supply to the right. ICBC can provide the same coverage at a lower cost. By reducing the coverage cost, the policy generates estimated saving of $1.5 billion, helping support a 15% basic rate reduction and average saving for roughly $490 per customers. And second, consider people's action after an accident might change after the policy reform. We can explain this by using game theory and moral hazard. After a minor accident, the fault and no-fault driver can either report to ICBC or settle privately. Before Enhanced Care, the no-fault driver had a strong incentive to report because proving fault could bring more financial benefit. Anticipating this, the fault driver also had an incentive to report and prepare for litigation. Reporting, therefore, became the best response for both drivers. After Enhanced Care, compensation is lessly tied to proving fault. Both drivers may now prefer a private settlement. The fault driver can avoid formal claim, while the no-fault driver receives immediate payment and avoids claim process. When private settlement in each driver best response, if others also want to settle, it becomes a natural equilibrium. However, this equilibrium can be also moral hazard. Private settlement is a hidden action that ICBC cannot directly observe. Some minor accidents may go underreported, giving ICBC less complete information about accident frequency and driver risk. Therefore, Enhanced Care changes both drivers' strategic incentives while creating an information problem for the insurer.
So we've just seen how Enhanced Care acted as a structural shock that eliminated the deadweight loss created by litigation in the auto insurance market. But the policy didn't just affect drivers. It also changed the market for substitute forms of transportation, including cycling, walking, and ride-sharing. To understand why, we need to think about the expected cost and financial risk. Before Enhanced Care, if a cyclist or pedestrian was hit by a vehicle, they faced significant financial uncertainty. According to ICBC, recovery benefits under the old adversarial system were often capped at around $150,000 to $300,000, and receiving compensation typically required 3 to 5 years of legal battles. That meant that the expected cost of a serious accident for vulnerable road users was extremely high. Enhanced Care completely changed those incentives. Today, anyone in British Columbia injured in a crash involving a vehicle is entitled to unlimited, pre-approved care and recovery benefits, regardless of who is at fault. Economically, this created a guaranteed safety net that lowered the risk-adjusted cost of using alternative transportation. We know from cross-price elasticity of demand that when the effective cost of a substitute falls, demand for that substitute increases. By removing the catastrophic financial consequences of a collision, enhanced care made active transportation less risky and encouraged more people to cycle and walk. This shift in consumer behavior also extends to the sharing economy. Ride-sharing services like Uber and Lyft are substitutes for personal vehicle ownership. As more people choose these alternatives and as vehicles remaining on roads increasingly become modern and electric, ICBC faces new challenges in its cost structure. While enhanced care stabilized bodily injury claims by ensuring that 96% of claims go directly towards care and recovery instead of legal fees, material damage claims are becoming more expensive. According to ICBC's 2024/2025 annual report, modern vehicles, especially electric vehicles equipped with sensors, cameras, and driver assistance technology, cost significantly more to repair and replace. So although the no-fault policy solved the market failure created by litigation, ICBC now has to adapt their pricing strategy to account for the rising and relative.
We've covered how enhanced care has reshaped litigation, transit substitution, and ICBC's claims costs. Now we're going to look at how it also reshaped pricing strategy through price elasticity and price discrimination, two core economic concepts. Let's start with elasticity. When gas prices spike, drivers respond by cutting back, carpooling, combining errand runs, and taking transit whenever they can. These are textbook elasticity responses. As the price of a complementary good, gasoline in this case, rises, the quantity of driving demanded falls. Normally, that behavioral shift wouldn't directly touch insurance premium prices, since basic coverage has historically been priced more or less at flat rates regardless of how much each individual actually drives. But that's exactly what enhanced care opened the door to changing. With litigation no longer eating into ICBC's cost structure, the corporation has been expanding distance-based discounts and exploring usage-based insurance, essentially using telematics to track how much and sometimes where you drive. For example, customers driving under roughly 15,000 kilometers a year right now can already access lower premium rates. Economically, this is referred to as third-degree price discrimination. ICBC is segmenting drivers by an observable, low cost to verify characteristic, distance-driven, and charging different prices to each segment based on their actual risk and road exposure. Low mileage drivers, who impose less expected costs on the system, pay less. High mileage drivers pay more. This matters because it links a macroeconomic shock, rising gas prices, directly into the insurance market. When gas prices push people to drive less, usage-based pricing means that behavioral change now shows up as a real premium saving. So enhanced care didn't just remove a market failure from litigation, it created the cost headroom and incentive for ICBC to price more efficiently, rewarding the exact behavior that elasticity already predicts drivers will choose.
Thanks for watching!